Hi guys, you are welcome to today's video. In today's video, we will be preparing ledger and extracting of our trial balance from the prepared ledgers. Now we know what trial balance means, we know what ledgers mean for our classes, but today we will be doing the practical aspect. But let me just briefly talk about trial balance. When we are talking about trial balance, it is a statement. It is a statement that shows list of balance in double entry form, which is extracted from the ledger to test the arithmetic accuracy of the account. And the rules in trial balance says the rules of the trial balance. So the rule says you debit your asset, you credit what? Your liability. Also, you debit expenses, you credit your income. Now, after knowing this, we are going to look at, let's look at the difference between trial balance and balance sheet. Those are some questions that you may be asked to write in your exam. That's why I'm saying this in this video. So when you're talking about the difference between trial balance and balance sheet, as well know, balance sheet is also known as statement of financial position. You get, is used to know is used for ascertaining the total assets and liability of the company. Do you get? Now, when you are not talking about the difference, so you now start comparing the both of them. For instance, if you look at trial balance it has debit and credit, right? But in balance sheet, it is having assets and liabilities. So that is one. Number two, trial balance is used to, it is extracted from the ledger, right? It's extracted from the ledger and is used in preparing the final account. While the balance sheet is what it is prepared after the preparation of final account, which is the trading profit and loss account. It is prepared after the preparation of trading profit and loss account. Also, we say that ledger is used to test the arithmetical accuracy of the account, while balance sheet it shows the financial position of the business, and so on like that. Just start comparing the beautiful things you can see when preparing this account. So those are what you should be expecting in your exam, in your written exam, before moving to the one that you will solve the question. And also, we have errors that does not affect trial balance. When we are talking about errors that does not affect trial balance, we have error of omission, original entry, complete reversal, error of duplication. Let me start with error of omission. When a transaction is completely omitted from the book of account, we call it error of omission. We are talking about error of omission. When a transaction is written in another person's name, you get it, we call it error of commission. When talking about error of original entry, when a transaction is wrongly written, you get, maybe the amount is wrongly written, that is error of original entry. When we are talking about complete reversal entry, this occurs whereby the account that's supposed to be debited is credited and the account that's supposed to be credited is debited. And also we have duplication error. That one occurs when you write the same transaction two times. When you write it two times, you don't have duplication, you're doing it two times, you get. Now, so those things you need to do it. But these errors, I usually talk about them when we are doing our correction of errors and suspect account. That's where I talk about them. So let's move to today's business, which is this. Don't forget, the first thing here is that we are going to prepare all ledgers accounts before extracting the trial balance. Now, if you look at all these transactions here, you see that we have the combination of cash and bank. And when we have the combination of cash and bank, we can just prepare, okay, you can do it separately, you can do it in 2 ways. Either you prepare your 2-column cash book, or you just prepare your cash account and bank account. Any of the two. So let me prepare a solution. Okay. Work is. So let me prepare separately. We are going to have our cash account, we are going to have our bank account separately. You get? So here now we are going to have cash account, credit, we have our bank account. So we need to manage this case. Credit, debit. Now, if you look at the question clearly, we have started business with 5,000 naira in cash and 15,000 naira in bank. So when you want to start to prepare your account, the first thing you should write is the name of the person. You can see I made a mistake. I should have written the name of the person. Okay, instead of writing this workings, let's write the name of the account. Who owns the account? The person is Omo Second. So you are going to write the name of the person, and you are going to write it under ledger, preparation of ledger account as at 31st is the last date, April 2005. Now you start preparing your account. The first transaction here started business with 5,000 naira in cash and 15,000 in bank. So we are going to have our capital, right? So we have capital account. Let me put our capital account. So I want to manage this piece. You know that this bank account now, let me prepare a capital account. I'm managing the board down as well. So for the capital account now, you know that the total capital you use to start the business is combination of cash and bank, which is, so we are going to write it here on the credit side. Don't forget, capital is a liability. It's because in accounting, business is treated as a separate entity. So if the owner puts money in the business, therefore it is a liability to the business. Do you know? It is a liability to the business, while the owner is a creditor to the business. That's why capital is treated as a liability and it has credit balance. Do you get it now? So your capital will be April 1st. So you have April 1st. Cash, which is 5,000 naira, and bank, which is 15,000 naira. So you now move to your bank account. You have naira, April 1st, which is, it will now be capital, the other account, capital. What is the amount? 15,000 naira. Write it clearly, 15,000 naira. So this is 15,000 naira. Now for the cash, we move here, April 1st, which is how much? Capital 15,000 and 5,000 naira. So the next one, the next transaction is he bought furniture from Lucky Wood Design for 2,000 naira and paid by check. Do you get it now? So the transaction here is that he bought furniture, 2,000 naira from Lucky Wood. Okay, this is how we are going to do it. He bought furniture from Lucky Wood, right? We are going to prepare two accounts, which is the furniture account and Lucky Wood account. So let's prepare the furniture account. We have furniture account. So we have debit, we have credit. So he bought furniture. You know that when you bought furniture account will be debited, right? Because it's an asset, and I'm giving you the rules of trial balance. So furniture 2,000 naira. He bought furniture from Lucky Wood. So which is what? April 2. So we have April 2. Now, the other account is Luckywood account. Luckywood. You know that Luckywood is the one giving out the furniture, right? So Luckywood is giving out, and we said any account that is giving out will be credited. So we just put here at the credit side, we are going to write April 2 furniture, right? 2,000 naira. Now they now say that and paid by check. Know that after you have sold the goods, you now pay Luckywood by check. When you pay Luckywood by check, money is coming out from your bank, right? You know how money is going to come out from your bank. Now, when money come out from your bank, you are going to credit your bank since money is going out. So you just move to here to your bank. You are going to write April 2. April 2. What happened in April 2? You paid Luckywood, right? 2,000 naira. Then you move here. You move here since you paid Luckywood. Luckywood is receiving the money. So you move here. You write 2,000 naira. When you write 2,000 naira, don't forget that the account is bank, and this will be also April 2. Therefore, this account are closed. You can say that this account are closed. You bought the goods, you paid for the goods, but you have your financial account to be debited. Therefore, you can just rub off this account, it has closed. But I'm just showing you the transaction, how to prepare it. Now, when you move to the next one, we have April 5. Receive supply of goods from C and K, 6,000 on the credit. So now you receive supply of goods, you are receiving goods from your creditor. You know when you receive goods, you are going to debit it to purchase. So you prepare a purchase account. Purchase account. You receive how much? Receive goods for receive supply of goods, right? From C and K, which is April 5. So you write April 5, it is naira, right? So C and K, you receive goods of 6,000 naira on credit. Therefore, when you receive goods of 6,000 naira on credit, it's only a creditor that can give you goods of 6,000. You get? So you just prepare your creditor account, which is C and K. C and K is a creditor. We are going to write it here. C and K account. So credit, debit. Now we are going to have what is one giving out goods. Therefore, you are going to credit his account. Now you are going to write 6,000 naira. The account will be purchased, and the date is April 5. So I'm managing the board. Please don't mind me. Now the next one is April 10, which is he recorded a cash sales of 1,000 naira. You sold goods. Know that when you sold goods, you are going to credit your sales because you sold goods. Goods are coming out. Therefore, you credit sales. You open sales account. Now, you open your sales account. Sales account. Credit, debit. You sold goods, right? So here it will be cash. Naira 1,000 naira. What is the date? April 10. But when you sold that goods, you collected money of a cash of 1,000 naira. Therefore, you will add that amount to your cash account. That is, you are going to debit it, saying that April 15. Is it 10 or 15? Okay, it's 10. So April 10, you collected money, which is sales, right? That is cash sales of 1,000 naira. Now we are going to move to April 15. He supplied goods for Gentic and Sons 7,000 naira and received a check immediately. So you sold goods to Gentic and Sons and you received a check. It's the same thing with what we just did now, which is cash sales. You understand? You sold goods, collected money, but yeah, the person you sold goods to is Gentic and Sons. So you just write it as this. You just write Gentic and Sons account, credit, debit. So when you sold goods to Gentic and Sons, you received a check immediately, right? That means Gentic is one paying you, money is coming out from his account, therefore his credit his account. So you have April 15, which is check, and check is bank, right? So you write bank. How much is the amount? The amount is 7,000 naira. Now you move to bank account. You are going to add this here, which is April 15. So how much is the amount? 7,000 naira. And we have what? We have the name to be Gentic Sons. So I'll just write G and X. We don't have space. We don't have enough space. Now the next one is paid C and K 3,000 naira. Okay, your creditor, which is C and K. You know that C and K is a creditor, right? So you paid him 3,000 naira. Therefore, he's receiving money, right? You debit his account. 3,000 naira. So you debit his account. April 17, which is cash. You paid in cash. Now you move to credit. You move to your cash account. One is coming out from your account. One is coming out from your account here, which is cash, right? So you write naira 3,000 naira. You gave it to which person? C and K. April 17. It should be in the back here, but there's no enough space. So we just need to manage it. Now the next one is bought goods for cash 5,000 naira. So you bought goods, but you paid cash. So money is coming out here, therefore you credit your cash account. What is the date? April 20. So April 20, you have purchase. You made a purchase of how much? 5,000 naira. So we write the 5,000 naira. Do you get it now? You now move to purchase account. You put it in the debit side. The reason you are putting the debit side, the question says you bought goods. The goods is coming in, which is purchase, right? Because the goods name is not stated. Now, money is coming out from you paid cash. Money is coming out from your cash. You credit your cash. So here now, you just write April 20. On the 20, you have a cash 5,000 naira. Now, the next one is April 22. Sold goods for 10,000 naira and received 6,000 naira by check and balance by cash. So you sold goods, sales. Where is our sales account? This is our sales account. The date is April 22. The sales you made at that time is 10,000 naira, right? Now they said you paid in cash, so you write cash. How much do you pay in cash? Since they said you paid 6,000 naira in check, it means you are going to pay 4,000 naira in cash, right? So, okay, so the person, they said you receive 6,000 naira in check. It means you are going to receive 4,000 naira in cash. Since the total amount you have to receive is 10,000 naira, just subtract it. So our cash will be 4,000 naira, and also that year you are going to write bank 6,000 naira. Now we move to our cash account, we debit 4,000 naira. So what is that? It is sales. April. What's the date? 22. Now we move to our bank also, we debit it April 22, which is sales of how much? 6,000 naira. Now let's move to the next one. The next one says supplied goods to UCO on credit 5,000 naira. So you supply goods on credit to UCO. When you supply goods on credit to UCO, you know that UCO is receiving goods. You are the one giving out. So you open UCO account. UCO account, credit, debit. So the question says again, supply goods to UCO. So UCO is the one receiving goods on credit, right? So you move to UCO account. You are going to write how much? 5,000 naira. Now, what account is this going to be? This is going to be sales. This UCO now is a debtor. How did I know that it's a debtor? You know that the other time I said C and K is a creditor. Now, this one is a debtor. How did I know that it's a debtor? You know that when you sold goods on credit to a customer, the customer is a debtor. Is one owing you, right? But if you bought goods on a credit, the person you bought the goods from is a creditor because you are owing the person. So note that to what it's very well. So UCO is a debtor, but it has a value of writing account. Now, the second transaction is going to be in your sales account. The reason why you sold goods to me, so it's going to go to sales. But the goods you sold to him is on credit. Therefore, you just write on the what is it? 23, right? So we are going to have UCO account 5,000 naira. 5,000 naira. Now let's move on. We have what again? We have sales of goods 8,000 naira and receive share for the same amount. So you sold goods 8,000 naira and you receive the amount by check. So you just write sales. Your sales on the 26th, right? So you just write 26. You receive how much? Check, which is bank, right? And the bank is 8,000 naira. So now I'm going to clean up this place. So that you can write this very well. So because of space, to be able to expand this, so I've written some here, like the sales account. You can see that they have rubbed it off. So this is the identic account, I've rubbed it off from here. And this one, which is UCO account, which I called the debtor the other time, I've written it here. So when we stopped here the other time. We said, okay, we have written this, we stopped here. We said sold goods for 8,000 naira and receive check the same amount. So now you sold goods, you know that this is going out. Therefore, you are going to credit it to the sales account since you sold goods, it's going out, right? You are going to credit the sales account. But you receive money which is check, that is bank, right? You are now going to move to the bank account. You are going to write April 26. So what is the heading? It will be sales. How much is it? 8,000 naira. Can you see how this works? So it's the double entry principle. You credit one account to debit the other account. Get it now. So let's move here. You withdraw 4,000 naira from the bank for petty cash expenses. Now here is a contra entry. I hope we see we call our contra entry from our 2-column pattern, whereby we say that any money we withdraw for office use is a contra entry. So this petty expenses is for office use, so it is not drawing, it is contra entry. Now, how do you treat your contra entry? So as we said that it is contra entry, we said it is contra entry. Now you now look at the question again. We drop 4,000 naira from bank for petty cash expenses. Now, when 4,000 is withdrawn from bank, the money is coming out from your bank, right? So you credit your bank by saying April 30. How much is coming out from the bank? 4,000 naira. So the title or the particular is what? Cash. You will now move to cash account to write April 30. You know that you are receiving cash, so you now the particular with the bank. So how much is receiving? How much are you receiving? It is 4,000 naira. Now, you get it now. But if that we prepare to column and we already put C in the folder, showing that it is a contract entry. And you are looking at here it is petty expenses. You know that the cash you are withdrawing from the bank is what you use for your petty expenses. So this is a contract entry. Now moving to the last one, which is April 31. Receive supplies from C7K goods worth 3,000 naira on credit. So you receive goods on credit. Now let's open. Okay, we can open it. What's the again? C7K account, which is how much? Credit debit. You receive goods worth 3,000 naira from him. When you receive goods worth 3,000 naira from him, it means that he is a creditor because you receive goods on credit. You get? Now, this guy here, the goods is coming out from his hand. Therefore, he is giving out, right? Therefore, we are going to credit his account by writing 3,000 naira. And the particular is going to be what? Is going to be purchase. So we purchase goods from him. What is the date? The date is April 31. So we have April 31. Purchase of 3,000 naira. Then you move to purchase account. I'm going to write on the 31, which is C7K. How much is it? 3,000. Now we are done with all our accounts. Next is to balance it up and extract our balance. So let's start from here. Let's start from the cash account. From the cash account here, the total at the debit side is we have 5,000, we have 1,000, we have 4,000, we have 4,000. That is how much in total? 8,000, 6,000, that is 14,000. So it is bigger than the credit side, right? So we have a balance of 14,000. I'm going to write 14,000. Now you subtract this amount from this side. Now the balance is 14,000, right? When you subtract this amount from it, you are going to have how much left? You are going to have 6,000 left. It means that we have a balance carried down of 6,000 naira. So when you add up this up, you see that you are going to get 14,000. You understand what I said? Add this up 14,000 naira. You know that this side is bigger than this side. Here we have a balance of 8,000 naira. When you subtract it from this total, you are going to have a balance carried down of 6,000 naira. So you now write balance brought down 6,000. Here now we only have one transaction. Therefore you can just close it. Now here also you have only one transaction, so you just close it. Here now let's subtract. The total at the debit side is 15,000 plus 7,000, that is 22,000. Plus 6,000, that is 28,000. Plus 8,000, that is 36,000. So it is bigger than the one at the first side. So you just write 36,000. Here also you write 36,000. Now how do you know our balance carried down? You subtract this from the total, right? So you have this 6,000 and the total here is 36,000. So our balance carried down is 30,000. Now let's check again. If we make mistake. So we have 0, 0, 0, 0. 8 plus 6, that's 14. 14 plus 7, that is 21. 21 plus 5, that is 30. That is 26, right? So we have 6, we have 2 here. It's correct. So we have a balance carried down, balance brought down rather, of 30,000 naira. Now we move to this one account has closed. Here now you have this guy is the creditor, right? We said it the other time. So we have 6,000 naira on the credit side, we have 3,000 naira on the credit side. Let me write it out so that it will be clear. You can just balance this one as this, and you can balance this one as this. Now let me write the one of that guy out here, which is debit C and K account, all divided by, so we have April 17, which is cash 3,000. And the other one is April 5, which is purchase 6,000. So here now, this balance here is 6,000 naira. So we have 6,000 naira because it's bigger than 1 year, right? So we are now going to subtract this from the total, which is 6,000 minus 3,000. That is 3,000, right? Therefore, you have a balance carried down 3,000. So we are going to have balance brought down 3,000. Now let's move here again. Here also, the total here is going to be 15,000. So this plus this is 11,000 plus 3,000, that is 14,000. So the total is 14,000, right? So you have 14,000. Now when you take, so you are going to have the balance carried down here. So you balance both sides. You have 14,000. You are going to have balance carried down 14,000 naira. Now you are going to have balance brought down 14,000 naira. You get it now. So what account again? We have prepared this. That is the thing. Now the last one, the capital account. Capital account we have to balance it. So the total is what? 20,000 naira. So we are going to have 20,000 naira here. Balance. So April. Okay, no need of writing the date. Just write balance carried down. It's going to be naira how much? 20,000. Now we are going to have balance brought down. Don't forget balance brought down. 20,000. So you are going to be writing the date. The last date is 31st, right? You don't write date 31st. So we have balanced all the accounts. After doing that, we are going to prepare our trial balance. So our trial balance is like this. We are going to have we are going to write your trial balance. So don't mind the way this is being drew, because you can see that there is no ruler here, but you want to do it in your book, make sure it is straight and neat. So particulars, we have your debit, you have your credit in there. So let's start with cash account. Cash account has a debit balance, which is 6,000 naira. So you have cash 6,000 naira. We move to bank. Bank has a debit of. So what do you write here? Is it 30,000? Or okay, it is 30,000. So that is 30,000 naira. Now the next one we have purchase. Purchase has a debit balance of. So I'm writing the debit balance first. You get, which is 14,000. So we have 14,000. Now which account again has a debit balance? So who called there, which is the debtor, has a debit balance? Who debtor has a debit balance of 5,000 naira. So we have 5,000 naira. Now we have furniture also, 2,000 naira. So we have furniture 2,000 naira. Now we are going to do we haven't balanced our supply. Yes, we haven't balanced this. So now the total of this supply is going to be 1,000 plus 4,000, 5,000 plus 5,000, that's 10,000, plus 6,000, that is 16,000, plus 8,000, that is going to give us 24,000. So we have a total of 24,000. So I can't run this up again. We are going to manage this. So this is a total of 24,000. You get. So we are going to have 24,000 here. And we have our balance carried down here. Balance carried down, which is 24,000. So we are going to have balance brought down here. Don't forget, we are going to have balance brought down, which is 24,000. Do you understand? But there is no space again, so we have to manage this. You get it now? So we are going to start with, let's start with capital. Capital has a credit balance of 20,000. So we have capital 20,000 naira. Then we move to sales. Sales has a credit balance also. So we have sales 24,000. Then we move to this has the debit, this has the credit, C and K. C and K. The other time we said that is debit balance of 3,000. So we have 3,000. Then we move to these are the debit balance. We have recorded this. So we have not recorded this, which has a credit balance of 7,000. So we just write it as G and X, which is then 6 months. Has a debit credit balance of 7,000. Now, which account again? This account has balance each other. You can see that balance each other. Therefore, no need of writing this in the book of balance. Account has already closed. So we have recorded this, we have recorded this, we have recorded this, we have recorded the purchase, right? So we have recorded, no, we haven't recorded this, which is credit balance of 3,000. C7K. Okay. So we have C7K, which is 3,000. So what again? So let's count it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So how many transactions do you have here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So I have recorded everything. Now let's balance this up. If the two sides is not equal to each other, it means there is an error. You have committed an error. You get it now. So now let's look at 6,000 plus 30,000, that is 36,000. 36,000 plus 14,000, that is 50,000. 50,000 plus 5,000, that is 55,000. Plus 2,000, that is 57,000. So we have 57,000. Now, at the other side, we have 20 plus 24,000, that is 44,000. 44,000 plus 3,000, that is 47,000. 47,000 plus 7,000, that is going to give us 47,000 plus 7,000, that is going to give us 54,000. 54,000 plus 3,000, that is going to give us 57,000. So at this side, I'm going to have 57,000. So therefore, you can see that it is accurate, but it may be accurate and there will still be a mistake here, which is the error we talked about the other time. Error of commission. All those errors are errors that affect balance, but it doesn't disclose your this your balance for debit and credit will still be equal, but you won't know that there is an error there. But I'm very sure and certain that what you did here is correct. So I'm just telling you the case. Now, thank you for watching. Thank you for taking your time to watch this beautiful question or joining me in solving this beautiful question together. Thank you. Please don't forget to like, share, and subscribe to my channel to watch more of this. Bye.